And these are the different types of loans I told you. See, at the end of the day, let me tell you, like, what should you think about when you think about a loan? Let's say that you're going to borrow 100 rupees. Out of the 100 rupees, you need to ask the person how much is the interest rate. Okay, number one. When are you going to start calculating the interest? Number two. Okay, how much is the processing fee? Suppose you're giving me 100 rupees, how much money are you going to take for processing? Okay, then third, most important, but this one, how soon do you need this money from me? Okay, these are all factors, no? So when you're getting the money, the same thing applies for your educational loan also. You want to get maximum amount of money at the minimum interest rate with the longest payback period, which gives you flexibility in long term payment. All right, that's the kind of thing, and you want all these favorable parameters when you're getting the loan. All right, now very quickly, someone says I have a loan of 100, like for 100 rupees I'm going to charge 14%. Another person says 100 rupees I'm going to charge 4%. Which one will you take? Now 100 with 4%, pay me back within 2 weeks. Okay, 100 with 14%, pay me in 2 years. So which one will you pick now? Okay, that is what I'm trying to say. Again, I just showed you two parameters. What are the two parameters I showed you? Interest rate and the payback period, right? How much time, the tenure for the loan. It doesn't stop at that. There are multiple parameters. In fact, many parameters you have to consider. There are a lot of hidden things that are there. Okay. Example of it is people will say that you need to give a processing fee. Okay, so meaning, see, if I'm going to give you 100 rupees, I will take 5 rupees as processing fee. Okay, that is not valid, no? That is not probably what you want. So like that, there is a processing fee. And then when do you start giving me the interest rate? When I'm studying, do you give me the interest rate? See, for example, when does the clock start? All right, so if it's 100 rupees now, today, all right, and you say that I'm going to start adding the interest now itself, what happens? Okay, so those all things matter when you're looking at all the different things. And of course, collateral. So if I say I'm going to give you 100 rupees, give me your watch. Only then I'm going to give you 100 rupees. Okay, or give me your ID card. Okay, or something on ID card doesn't matter. Sorry, ID card is no use. So I will say, give me your watch. Okay, that is an example of or some other. Give me your mobile phone or whatever it is. I'm just making it up, guys. I like for 100 rupees, you guys can figure out like what all can be collaterals. But just like that's just an analogy out here. So loans in the home country need mostly collateral. Non-banking finance corporations became very popular because they don't need any collateral. They are okay with having no guarantor and so on. And then the collateral free loans, I told you, right? University of Michigan Credit Union did not need a collateral sometimes. So they sometimes they need a co-signer from the US or whichever country you are in. They need somebody to sign it or a guarantor, so on. University loans, I told you, are need based, right? So which are given to people at the enrollment stage and so on. And now this is a concept which is there in the US, adopted by some of the other places as well right now. Very popular for business school programs, slowly being adopted for graduate school programs also. What they do is like they do it like a mortgage. How they do mortgage for house, if you guys are aware. They will a fixed percent of your salary will always be given towards the loan, okay, irrespective of how much you're getting. Like basically looking at your future earning potential and the program and the college and everything else, they will fix this for you. So if you're coming from Stanford, okay, obviously they expect you to do wonders, and therefore your salary is supposed to be high, and therefore the amount of loan that you can get will be given more as well. So this is an example of how it works.